Welcome to this next edition of FIU Insights. I'm David Kramer, Senior Fellow with the Green School of International and Public Affairs. Today's topic, COVID-19 and the economy, from global markets to local jobs. The global pandemic, staggering in the number of people infected, has also brought the world economy to a halt, causing major disruption from global financial markets to the industries that call South Florida home. With some 10 million people who have lost jobs in just the past 2 weeks alone, and more sadly likely to follow, economists fear the U.S. may suffer an economic shock that might rival the Great Depression. How is the pandemic affecting families and businesses around the U.S. and around the world? What impact economically is this crisis going to have globally, nationally, and locally? We're fortunate today to have three outstanding FIU experts to discuss the short, medium, and long-term impact of this crisis and what people might be able to do to get some help. Joining us for today is Mark Weinstein, Professor, Faculty, and Director of the MS Human Resource Management Program in the College of Business, Mihaela Pintea, Associate Professor in the Department of Economics, and Ned Murray, Associate Director, Jorge Perez Metropolitan Center. And my thanks to all three of you for joining us today, particularly coming on short notice after the pretty staggering job unemployment report yesterday. And Mark, let me pick up on that and start with you if I can. Give us a perspective on these unemployment numbers that we've seen these past 2 weeks as a result of the general shutdown that we're seeing across the nation.
Well, clearly Southern Florida is severely impacted. So much of our industry here, and others on the panel, including Ned and Mihaela, I'm sure could speak to this, is around services and restaurants, hotels, and what have you. And these are individuals, of course, who tend to live check to check as it is. So we think of the unemployment system as typically operating not in an emergency situation. It's really to help people tide themselves over, and it's sort of built into the system. So at Space, Florida only has 12 weeks of support at only a $275 maximum. In this system, the assumption is that the economy is strong and there's growth, and there is a provision for the benefits to be longer. But clearly, this shock is stressing the unemployment system because it's being asked not only to help people in the short term, but also has a macroeconomic dimension in terms of helping the economy get going in the short term.
Also describe how the unemployment benefits system works. There's funding, obviously, through the stimulus package that's coming through into states, but it's the states, am I right, that are the ones who actually...
There's state-to-state variation. Typically, it is paid for through a tax on wage bill that employers pay. It's an insurance system. And so the cost of the system is based also on how much it's being used. There was a large reform in 2011 because of the recession in 2008. The fund had been used and there was a need to refund it or lessen benefits. And in Florida, the path taken was to lessen benefits. So the system in 2011 was reformed in an effort to keep employer taxes down, but the trade-off was capping the unemployment insurance benefit at a relatively low rate, $275 per week. Now, with the stimulus package, there is an additional $600 a week available. So that amount will go from $275 to those who are eligible, $875, but that eligibility is based on previous income. And it's about 40 to 50% of your previous income over the last 18 months.
And one more to you, Mark, and then we'll turn to Ned. There have been some difficulties, not surprisingly, given the volume with people being able to get online, apply, and register for all of this. If you could just talk a little bit about that.
It's a real problem. And it's a problem that has been known. So there have been a series of audits of the system since 2011 that have highlighted problems under normal circumstances where new claims are relatively low. The system was already fragile. With nearly 250,000 new claims coming in the state of Florida in the past week, the system is down. There's no other way of saying it. And there have been numerous media reports. I've checked it at various times during the day. There is emergency paper application. But just to give you a sense of how much needs to be done on the site doesn't allow you to register with mobile devices. You can't do it by phone, you can't do it by an iPad or any such mobile device. These days, a lot of people don't have laptop computers or access to computers. So the system is years behind of where it should be under the best of circumstances.
And I assume this is a problem not unique to Florida, but this is nationwide.
It's probably not unique to Florida, but unfortunately, Florida doesn't have a strong tradition of investing in these kinds of things.
Great, thanks very much. Ned, let's turn to you. If you could give us a perspective of how this is having an impact here in South Florida.
Okay. Well, 2 weeks ago, the George M. Perez Metropolitan Center launched a research initiative that would look at the short and long-term economic and social impacts of COVID-19. We did that because this is what we do, economic research over the years, looking at various industrial sectors, but also looking at issues such as economic opportunity, income inequality, workforce housing. We had an understanding at the outset that given our basic industries here in South Florida and specifically Miami-Dade, that we were going to be very vulnerable to this shock, this economic shock brought on by the pandemic. We obviously looked back at previous recessions and even going back to the Great Depression, of course, the 1930s, and we think the 2008 recession, which obviously was brought on mainly because of the subprime lending crisis, and of course all the issues that followed in terms of industries being hurt and occupations right across the board. So we think that was or is instructive from the standpoint that all the industries were impacted by that recession, some more than others. What we're seeing with this, though, is the vulnerable industries and the occupations that comprise them were concerning to us because we know that they comprise most of our employment, and that a lot of these businesses are very, very small. We're looking at a stimulus bill that came out of Washington, looking at businesses for assistance under 500, which is the SBA definition. But 81% of our businesses here in Miami-Dade are under 10 employees. We are basically micro businesses here. And a lot of them don't have the equity and the credit to be able to survive this long term. But even within the larger employment establishments, they too are predominantly in leisure and hospitality and retail, and the biggest hit, as we looked at the numbers that came out today, the 701,000 jobs that were lost, 469,000 of those, so almost 3/4 of those, came within leisure and hospitality. So this hits us hard, but it's also hitting a number of our sectors, and I think that's what's most concerning us right now, is the fact that all the sectors are getting hurt very quickly. Unlike the 2008 recession, where it took a while, several months, before we started to see the job loss across sectors. So that's something that we really need to watch. Fortunately, we have now the weekly job numbers coming out in terms of claims that we can monitor. But certainly, given the types of establishments we have here, the fact that the micro business status, as well as the lead industries in terms of employment, we really are looking at some real concerning issues coming over the next month or two.
Ned, let me ask you about the work that the Pitta's Metropolitan Center is doing. If you could maybe describe some of the ongoing work and the work that you have coming down the pipeline, even share the website with us so that those who are watching can follow it themselves.
Yeah, thank you, David. Our website is metropolitan.fiu.edu, and we have obviously a lot of our industry studies available on that website. But relative to our ongoing research on the economic and social impacts of the COVID-19, we've already put out several infographics over the past week. I think the third was posted today, which gives you some real good background information for the audience to see who our sectors are, the occupations that are being impacted, and we'll be adding to that on a weekly basis. We see this as really a dynamic type of research because we're trying to keep up with the numbers and obviously trying to keep up with the requests that we're getting for data, obviously from a number of sources, including the media. We also plan on doing our first webinar next week, next Thursday, and we'll get information out on that, working with Amy, which will be the first of a series where we actually got to drill down on some of these numbers. I'm giving you somewhat of an overview today, but starting next Thursday morning, we'll be actually drilling down on some of these specific industries. Now, the other real focus on what we're doing, which is one of my areas of interest, coming from the economic development field and my dissertation on industrial development, is looking at where we go from here once we get to a point of recovery. But our thinking is we need to begin that economic development planning now. Obviously, we found ourselves shortchanged in many ways with this whole health impact and shock on the economy that we're witnessing, and obviously in terms of population as well. But it's not too soon to begin thinking about our recovery and what that means in terms of not just businesses, but local governments, nonprofits, all those who need to be part of that recovery, and where we go from here, lessons learned in terms of what those opportunities might be. So that's going to be a lot of our focus as well, is when we let us start thinking about when we come out of this, where can we be stronger? How can we better diversify our local economies? How can we make them much more open to opportunity and equity for our local population? These are all things we'll be looking at over the next several weeks and months.
Metropolitan.fiu.edu.
Metropolitan.fiu.edu.
Great, thanks. All right, Mihaela, let me now turn to you. We've been talking about sort of the national scene, unemployment, the local impact of all of this. Let's step back and put this in a global context. This is obviously affecting everyone around the world. Give it your sense of the impact of this.
So, as you said, this has an impact on all the countries around the world. Some faster than on the others, but both developed and emerging market economies are going to be affected by it at some point. So most of the measures that countries took involve shelter in place, like lockdown of the economy, but the developed countries, the advanced countries, are better situated to sustain their population during this time. So if we're looking at developed countries, most of the developed countries, they were able to very fast install a fiscal stimulus or rescue package, whereas a lot of the emerging markets, they don't have the money to do that. So if we're going to look at the United States, we have this fiscal stimulus that was passed about a week ago, and that was actually the phase 3 of the fiscal stimulus. So we have expansionary fiscal policy. We also have expansionary monetary policy, which we hear about way less than about the expansionary fiscal policy, because the Fed actually started at the beginning of March. It cut the interest rate very dramatically. The interest rate are close to zero. They instituted quantitative easing, which is expansionary monetary policy that was developed, let's say, during the 2008-2009 recession. And in fact, the Fed has also a very important role in using some of the loans that were put forward during the CARES package to bring it to corporation as loans. So if we're going to So a lot of the advanced economies, a big component of the rescue package was trying to provide either loans or grants to different enterprises or corporations so that they maintain their people on the payroll. So the idea is that this is a crisis, or these enterprises, by no fault of their own, to some extent, suffer this major negative shock. And then if they're going to be able to maintain the workers on the payroll, then once the health care is going to go away, they're going to be able to restart the economic production pretty fast.
So let me ask you, this virus, of course, started in China and Asia, then worked its way to Europe. Now, the United States is the epicenter. Middle East, Iran, obviously, has had a terrible problem with this. And there is concern that it's going to go into Africa and South America. And if all the countries that generally provide assistance and funding for developing countries are in trouble themselves, what can this do to countries that need international assistance?
So if we're thinking about India, for example, they are on a 21 days lockdown that was imposed a few days ago. India doesn't have the resources that the United States have to provide for their population. So the fiscal stimulus in the United States is about $2 trillion, which is about 10% of the United States GDP. So India doesn't have necessarily access to, well, not necessarily, it doesn't have access to this level of funding in order to provide a stimulus to their own population. Plus, they were doing not, so in addition to that, you have the population is much more crowded than the United States. The idea of having shelter in place, of social isolation, is going to work less in developing countries where you have the population is much more crowded than in advanced economies. So the problem is also that the advanced economies don't really have the funds right now to provide aid to these countries. So there's a lot of programs developed by the international organizations such as the International Monetary Fund and the World Bank that is trying to provide some loans where they remove the conditionality to emerging markets, but they can't really afford to introduce the level of fiscal stimulus that we did in the United States and in most advanced economies.
Before I come back to Mark and Ned, let me just ask you one more question, Mihaela, and that's about global trade. Are we likely to see more protectionist measures put in place, whether by the United States and others? Are countries going to try to rein things in? What impact is this having on global trade if obviously this pandemic is worldwide?
So I would expect that, yes, we are going to see more protectionist policies, that there's going to be diminished importance of the global trade. So during this pandemic, there were major disruption to global trade where countries closed their borders, where the global supply chains were annihilated, let's put it this way. So I expect that moving forward, countries are going to be much more reluctant to outsource different parts of the production process in other countries, given the concern that this type of pandemic may be hopefully not on such a major global scale. We are going to experience them going forward. I mean, we did have, the SARS, the MERS. So this is not the first major virus that we have experienced for the past 20 years. It's just that there was nothing on such a global scale.
Exactly.
So
Yes.
Yes, I do expect that global trade will be negatively impacted by this pandemic, and countries are going to institute a certain level of protectionist policies and trying to maintain important or essential, both manufacturing and services locally.
Mark, let me come back to you about the employment and workforce issues that are being affected by this. Could we see, once we emerge from this, whenever that is, shifts in the workforce, that there will be some sectors where they will have adjusted to different kinds of work, working remotely from others? Will there be some sectors that will be more attractive and higher demand than others, do you think?
Well, a lot, of course, depends on the duration of the pandemic, how we emerge from the other end of it. But if we take a sort of a slow emergence, sort of not the worst case scenario, but a scenario where the disruption is sufficient that a number of small businesses are unable to survive, what we're going to see is a continuation of a trend that we've seen for a long time. Individuals with high levels of skills will have the kind of work that they can do remotely, and that the individuals who are in the service industry, have lower levels of human capital, are going to have a much more difficult time transitioning. It's not just simply a question of training when you're talking about moving this. And of course, this is where Nick is speaking more authoritatively. There are going to be differences across the country, and in Florida, which is clearly an economy that revolves around services and leisure and hospitality, there's not much you could say if the industry doesn't bounce back. Now, in a more optimistic perspective, if indeed the bounce back is relatively quick and businesses for other parts of the stimulus program are able to survive, people are still in place and the labor is still there. And we could see, perhaps in an optimistic scenario, the supplemental unemployment benefits and other stimulus other elements of the stimulus package might tie us over so that we will be able to emerge without long-term disruption. But that would be a very optimistic scenario.
So Ned, if I can, along those lines, turn to you. Which industries in Florida, obviously the service industries more broadly, are very important here, but which ones do you think might be in a better position to bounce back sooner than others in this region?
I would have to think that, well, certainly healthcare. I mean, you would think that we wouldn't be losing any jobs there, but a lot of our employment in healthcare is lower end, and these are folks who are losing all their jobs. But I think that there's an opportunity there, given everything we're going through right now, for that industry to expand in a lot of different ways. Our concern right now, in terms of leisure and hospitality, is that if you go back once again to prior recessions, particularly the most recent one in 2008, 2011, was when we pretty much bottomed out. With everything that was going on in terms of loss of jobs, we had people coming here from all over the world spending a lot of money. And that's what really kept some of these industries going, particularly leisure and hospitality. People come here and spend a lot of money. Well, guess what? Nobody's coming here right now.
And we don't want them to at the moment either.
No, we don't. Yeah, no. But if you think about it going forward, and this is why there's just so many uncertainties, and I think Mark brought up early on, the biggest one is just not knowing how long. Even with every recession we've had in the past, we had an idea, because we go through a recession every decade. So, and we kind of know what happens as a result of that. We know generally how long it's going to take. We know what sectors are going to respond this way, which ones are going to come back in a different way. We know there's going to be industry restructuring. We've seen a lot more of that. We're going to see even more of that coming forward. But I think the biggest issue on this one, from my perspective, is there's going to be some industry restructuring, and there's going to be some growth in certain sectors, but this is going to be really demand driven, more so than any other shock we've ever had. If you want to make money right now, if you get into the business of psychographics, I think this would be the time to do it, because I think there were a lot of trends that were already in place in terms of what buyers were doing, what consumers were doing, what workers are thinking. Those trends are going to be accelerating. over these next few months and into the recovery. And so that demand side, those demand factors globally, not just here in the United States, are really going to be something to watch. And I think that could put a lot more pressure on the actual the businesses themselves, the actual supply side, because they're going to anticipate some of that anyways. They already have, relative, particularly in the areas of retail. A lot of what's going on in the workforce in terms of work shifting, those types of things. Those trends have been going on for some time now. But there's going to be some real shifts in consumer confidence and buyer confidence on a lot of levels. There's going to be a lot of issues relative to capital investment in industries that we have not been able to foresee at this point, but we know it's going to happen just based upon prior recessions. So these are all the moving parts that we have to consider going forward. And like I said earlier, we need to start thinking about these now. We can't wait until 3-4 months from now. The recovery is probably not going to happen until next year at this point anyways, at the earliest. But when it comes, we can't be just wishing for the best. We have to be planning for it right now and looking at both the supply and demand side of the economy.
Mihaly, we only have a few minutes left. Let me ask you, it's I'm sure too early to offer any definitive judgments, but are there certain economies, say the Chinese economy, that may be better suited to emerge from this crisis than, say, the American economy? Are we going to be in a new kind of competition this time on an economic front? Or I guess we have been on an economic front, but even more so.
It's hard to say. So the Chinese economy was very export driven, but during recent years, there was a certain movement towards more domestic consumption. So they were less dependent on being export driven. They were less dependent on their exports. On the other hand, the Chinese, they provided economic aid and medical aid, even to some countries in Africa, even to some countries in Europe. And they were very good at publicizing their efforts. I think even more so than they actually, more than the value of that aid. How the US economy is going to evolve, like my colleagues have mentioned, it depends on how long this is going to last. If we're looking back to the Spanish flu, which is kind of the comparison that we have, right? The health scare that led to economic disruptions. We had it came in waves. So that's one of my concerns. Not only do we know how long we're going to be shelter in place in the near future, but are we going to have, once we remove this restriction, which is something that we do see in China, for example, some of the Asian countries that are ahead of us, that you have second waves of contagion. So are we going to go back to being socially isolated, or how long this is going to last? The longer it's going to last, the more disruptions to the economy and to the economic structures there are going to be. So if it lasts for a couple of weeks, we could argue that we can go back and have a very quick recovery, going back to the same structure that we had before. If it's going to last for a few months, people are going to be used to working remotely, like what jobs become essential. So that's going to probably, like Ned mentioned, to accelerate some of the trends that already existed, but also move to major shifts in how we approach work and education as well.
Great. All right. Well, I'm afraid we'll have to leave it there. Mihaly Patea, Mark Weinstein, Ned Murray, thanks very much to all three of you for your terrific insights on this and your views. This brings us to a close for this latest edition of FIU Insights. Please stay tuned for additional programs that we'll have coming up on this pandemic and its implications, as well as other issues. I'm David Kramer, Senior Fellow with the Green School here at Florida International University. Thanks very much for joining us.